All right, so today we're going to be taking apart Berkshire Hathaway as a potential investment.
Sounds good.
We've got a ton of their communications, shareholder letters, financial reports, investor presentations, all that good stuff.
Awesome.
So we're talking about Berkshire Hathaway,
Right.
a multinational conglomerate holding company, headquartered in Omaha, Nebraska,
Sure.
led by Warren Buffett.
Of course.
Now, their financials are pretty impressive.
Yeah, what stands out to you?
Well, they've got this consistent growth in net earnings attributable to shareholders.
Year after year.
Exactly. But investment and derivative gains play a huge role in their overall profitability.
Interesting.
Yeah.
So their insurance float is massive.
Yeah. How much is it?
It's sitting at about $169 billion.
Wow.
Yeah, it's a key part of their investment strategy.
Okay, so they've got all this money,
Right?
but they're pretty conservative with stock repurchases.
Oh, yeah. Incredibly disciplined.
So what's their approach?
Buy back shares only when the price is way below their business value.
Huh. Smart.
Textbook value-driven strategy.
Speaking of strategy,
Yeah.
they've definitely shifted their approach over the years.
How so?
Remember that buy fair businesses at wonderful prices.
Oh, yeah.
Now is more like
Now it's...
acquiring wonderful businesses at fair prices.
Makes sense. Who's responsible for that?
It's largely thanks to Charlie Munger.
Right.
They've gotten so big that finding those hidden gems at bargain prices is pretty much impossible.
So they had to adapt.
Exactly.
And this ties into their bedrock principle,
What's that?
financial strength.
Okay, so they focus on,
Maintaining redundant liquidity.
and that means,
Never being forced to sell assets at a bad price.
makes sense.
It gives them the flexibility to make strategic moves when the right opportunities come up.
I get it, cash is king,
Exactly.
but they can't just sit on it.
No, of course not.
They need to put that cash to work.
Right. And that's where their incredible diversity comes in.
They're what?
Their diverse range of industries, they're in everything.
Right.
Insurance, railroads, utilities, manufacturing, even candy.
Wow. Talk about spreading the risk.
It's strategic.
Give me some examples.
Well, there's Geico,
Cool.
auto insurance,
Yep.
BNSF for railroads,
Mm-hmm.
precision cast parts. They do aerospace manufacturing.
Andy M. too?
They Seas candies, of course.
They own C's?
They do.
Interesting.
Don't forget NetJets, private aviation.
Right.
All of that diversity helps protect them when a specific industry struggles.
It's like a built-in safety net.
Exactly.
But even with all that diversity, they still have rivals.
Oh, yeah, for sure.
So who are their biggest competitors?
In certain sectors, think American Express
Okay.
and Coca-Cola.
Interesting.
But they actually like investing in these well-established companies
Why?
because they have proven track records.
So they're basically saying if you can't beat them,
Join them.
right, but in a smarter way.
Exactly.
And they've indirectly increased their ownership in both of those companies.
Through share buybacks,
Clever.
it's like getting a bigger piece of the pie without paying extra.
Okay, let's get down to brass tacks.
Okay.
Is Berkshire Hathaway a good investment?
I mean, based on what we've seen so far,
Yeah.
there's a strong case to be made, strong financials, a solid strategy,
They've got a diverse portfolio.
and experienced leadership.
Sounds pretty good, but every investment has risks, right?
Of course, and one of the biggest ones is relying on key personnel.
Meaning.
Warren Buffett isn't getting any younger,
Right.
and while they have named a successor,
Greg Abel.
right, there's no guarantee how things will go under new leadership.
Yeah, it's the big question mark.
Definitely.
How do you replace a legend like Buffett?
Exactly.
And then you have to think about the impact of the economy on all those businesses.
Right, a global recession could really hurt.
And what about cybersecurity?
It's a risk they've acknowledged.
But how effective are their defenses?
That remains to be seen.
Okay, and then there's the massive capital requirements,
For some of their subsidiaries.
especially in things like utilities and energy.
Right.
It's a constant balancing act.
Investing for the future while protecting their financial fortress.
Exactly.
It shows their discipline and strategic thinking.
Okay, so we've talked about the Buffett factor,
Right.
but there's this story that really shows the potential of Berkshire.
What story?
It's about Warren Buffett's sister.
Birdie.
Yeah, Bertie Buffett.
Okay.
She basically turned a single investment into a fortune.
Ow.
Back in 1980, she got rid of everything in her portfolio.
Everything.
Well, almost everything.
Oh.
She kept her mutual fund
Uh-huh.
and her Berkshire Hathaway stock.
Smart move.
Right.
Yeah. 43 years later.
She's incredibly wealthy.
Wow. That's a testament to the power of long-term investing.
And patience.
And maybe a little faith in her brother.
Maybe.
Shows that investing doesn't have to be complicated.
Sometimes simple is best.
Right. Just pick good companies and hold on.
Let's talk about their energy business. They've hit some snags there.
What kind of snags?
Regulatory returns in the utility industry have been a problem. Even Buffett admitted to misjudging things there.
Leading to
Some costly mistakes.
So they're not perfect.
Nobody is.
True.
But it shows they're willing to learn.
And adapt.
Exactly.
But their insurance operations are killing it,
They're like the bedrock of the company.
providing that steady stream of float.
Exactly. And they had a record year in 2023.
Really?
Yeah. Sales, float, underwriting profits,
All up.
all up.
Wow. 57 years in the insurance business
They've learned a lot.
and built an amazing team.
A real Hall of Famer.
And they consistently deliver.
Even with hurricanes and disasters.
It's impressive.
They're also expanding globally.
Makes sense.
They've got the financial strength.
And the reputation.
So they're truly multinational company.
Which brings us to another risk.
What's that?
Geopolitical uncertainty,
Oh.
wars, trade disputes, political instability.
Yeah, it's a volatile world.
And it can impact their global operations.
It's a reminder that no company is immune.
To those external forces.
It adds a whole other layer of complexity.
To analyzing a company like Berkshire.
It's like a giant jigsaw puzzle.
With pieces that are constantly moving.
Right, so we always encourage our listeners
To do their own research.
read the source material.
And draw their own conclusions.
It's your money on the line.
Exactly.
So let's look at their manufacturing and retail businesses.
Okay.
They often get overshadowed,
By insurance and energy.
but they still make a significant contribution.
To their profits.
They have some hidden gems in there.
Like,
Precision cast parts.
right, a major supplier for the aerospace industry.
And Clayton Homes.
The home building business.
Exactly.
But those businesses face challenges.
Like the housing market.
It's so cyclical.
And sensitive to interest rates and the economy.
And aerospace is dealing with supply chain issues,
And rising fuel costs.
which squeeze their margins.
But Berkshire has a long history of overcoming these things. That's true.
And they're always looking for ways to improve.
And gain market share.
Now, here's a big question.
What is it?
Can a company this big
Yeah.
really keep growing?
Especially in a mature economy like the U.S.
It's the classic dilemma.
Size versus agility.
Can the elephant still dance?
That's the million-dollar question.
Right.
But remember, Berkshire has this unique structure.
Which allows them to
Operate in a decentralized way.
each subsidiary has a lot of autonomy.
Right, like a fleet of ships.
Each with its own captain.
But all sailing under the Berkshire flag.
Exactly.
They're really good at finding promising businesses.
And then letting their managers run them,
But there are limits to growth,
especially in the U.S.
which is why they're looking elsewhere.
Emerging
Markets.
like with high growth potential.
Exactly.
They're searching for new frontiers.
And they're not afraid to make big bets.
Like their investment in BYD.
A Chinese electric vehicle manufacturer.
That was a bold move.
It shows their willingness to take risks,
Calculated risks.
to find new growth.
And speaking of risks,
Oh boy.
succession planning is always a hot topic.
It's the question that hangs over them.
What happens after Buffett?
He's 94 years old.
Right.
He can't lead forever.
And while they've chosen Greg Abel,
To take over,
it's impossible to know how it'll play out.
Buffett is such an icon.
A legend.
It's hard to picture Berkshire without him.
His departure will be a major turning point.
It'll be fascinating to watch.
Absolutely.
It's one of the many reasons Berkshire Hathaway is so captivating.
Definitely.
Now, let's talk about their corporate governance.
Okay.
How do they manage this giant empire,
It's vital for any company.
but especially one like Berkshire?
With so many different holdings
They've got a good reputation,
for transparency and accountability.
strong board of directors,
And robust systems for risk and compliance.
but there have been some criticisms.
Right.
Lack of diversity at the top.
Their board isn't as diverse as it could be.
It's something they're working on.
And some investors are worried about Buffett's power.
He does have a lot of influence,
But he's got a talented team around him.
and succession planning is a priority.
They're not taking governance for granted.
They've built their reputation on trust.
And integrity.
Okay, let's talk ESG.
Environmental, social, and governance.
How does Berkshire stack up?
It's becoming more and more important for investors.
And Berkshire has faced criticism.
For lagging behind in some areas.
They've been slow to adopt formal ESG policies.
And their investments in certain industries have raised eyebrows.
Some fossil fuels,
Right.
but they've made progress in renewable energy.
Through Berkshire Hathaway Energy.
They've invested heavily in wind and solar,
And they've committed to reducing their carbon footprint.
But they're not divesting from fossil fuels overnight.
They're taking a balanced approach.
They won't sacrifice shareholder value.
Just to appease ESG advocates.
It's a complex issue.
With valid arguments on both sides.
Investors need to decide what matters most to them.
Exactly.
Okay, what about their company culture?
Berkshire Hathaway is known for its decentralized culture.
Entrepreneurial.
With an emphasis on integrity.
And long-term thinking.
They give their managers a lot of autonomy.
And they value their employees.
But it's a demanding culture.
With high expectations.
And they make tough decisions.
It's not for everyone.
But it attracts some of the best minds.
And that's a big factor in their success.
Absolutely.
So the big question,
the elephant in the room,
is Berkshire Hathaway a good investment?
We've covered a lot.
Financials, strategy, competition, risks, opportunities.
Their history, their culture, their leadership.
The impact of their success.
And the challenges they face.
It's not a simple answer.
It depends on your goals.
Your risk tolerance, your time horizon.
But hopefully this analysis has been helpful.
We want to give you the knowledge to make an informed decision.
And we encourage you to keep learning.
Berkshire Hathaway is a company worth watching.
They always keep things interesting.
Thanks for joining us.
For this deep dive into Berkshire Hathaway.
We'll be back soon to continue this discussion.
And explore even more facets of this fascinating company.
See you then.
You know what sets Berkshire Hathaway apart?
What's that?
Their skill in capital allocation.
Oh, yeah, they're really good at that.
It's like playing chess with billions of dollars.
They always seem to find those undervalued assets.
And they know how to deploy capital to create long-term value.
But it's not just about buying low and selling high, right?
No, they're not just bargain hunters.
So what else are they looking for?
Businesses with strong fundamentals, enduring competitive advantages.
So companies that generate cash flow consistently.
Yeah, exactly.
And their earnings keep growing.
And their returns compound over time.
Those are the hallmarks of a good long-term investment.
Right. And they're incredibly patient.
Yeah, they're not chasing quick returns.
They're playing the long game.
It's like they're in a different world than all those day traders.
Exactly. And their ownership structure helps with that.
How so?
They don't have to worry about quarterly earnings reports.
Or activist investors breathing down their necks.
Exactly.
So they can make decisions that are good for the long term.
Even if they're unpopular in the short term.
That's pretty refreshing to see.
It's one of the keys to their success.
Okay, let's shift gears a bit. Talk about their culture.
Yes, the Berkshire Hathaway culture.
It's definitely a big part of their story.
They've created an environment where integrity matters.
And humility.
And common sense.
Those aren't just buzzwords for them.
No, they're woven into everything they do.
It's something that Warren Buffett and Charlie Munger have built over decades.
They set the tone.
And it trickles down.
Throughout the whole organization.
It's not just about making money for them.
It's about doing business the right way.
Treating people with respect.
And building something that lasts.
And you can see that in their low employee turnover.
And their reputation as a great employer.
It's hard to replicate that kind of culture.
It's definitely part of what makes them unique.
Okay, let's dive into their investments.
All right.
They have such a huge portfolio.
They can't cover it all.
But we can talk about some key themes.
Sounds good.
One area that's been interesting is their tech investments.
It's a change for them.
Buffett was always skeptical of tech stocks.
But he's come around.
Their Apple investment is a prime example.
It's one of their biggest holdings.
And it's been a great move.
It shows they're willing to adapt.
And evolve their strategy.
As the world changes.
Another trend is their focus on renewable energy.
Through Berkshire Hathaway Energy.
They've become big players in wind and solar.
And they're not stopping there.
Smart move.
Both financially and environmentally.
All right, let's talk risks.
Every company has them.
And it's important to understand them before investing.
The biggest one for Berkshire is succession planning.
The Buffett question.
He's not getting any younger.
And even though they've named Greg Abel as his successor,
there's no guarantee how it'll go.
Buffett is such a big personality.
He's the face of Berkshire Hathaway.
His departure will be a major turning point.
For sure.
Another risk is their size and complexity.
They're in so many industries.
It's tough to manage everything effectively.
They're not immune to recessions.
Or problems in specific industries.
Their insurance business is vulnerable to natural disasters.
And their energy business faces regulations.
And the shift to clean energy.
It takes a lot of skill.
To manage a portfolio that diverse.
It's a balancing act, for sure.
Definitely.
Okay, let's talk about something that people see as a weakness.
What's that?
Their technology strategy.
Or lack thereof.
In the digital age.
Every company needs a strong tech foundation.
And some say Berkshire has been slow to adapt.
They haven't invested much in e-commerce.
or artificial intelligence.
Their decentralized structure makes it hard to implement big tech initiatives.
It's a catch-22.
But they're not a tech company at their core.
They're all about acquiring established businesses.
That's worked for them for a long time.
Did it really need to change?
That's a good question.
Maybe they can leverage what they already have.
And use partnerships to adapt.
Only time will tell.
It'll be interesting to watch.
Okay, another big topic these days.
What's that?
Corporate social responsibility.
Right. Companies can't just focus on profits anymore.
They need to show they're good citizens.
Investors are paying attention to ESG factors.
Environmental, social, and governance.
Exactly.
And Berkshire has been criticized in this area.
They've been slow to adopt formal ESG policies.
And their investments in fossil fuels have drawn some heat.
But they're making progress.
Especially in renewable energy.
Berkshire Hathaway Energy is a big investor in wind and solar.
And they're working on reducing their carbon footprint.
But they're not going to abandon fossil fuels immediately.
They're taking a more balanced approach.
Trying to do what's right.
While also maximizing value for their shareholders.
It's a tough balancing act.
Investors need to decide what's important to them.
And make their choices accordingly.
You know, Berkshire Hathaway is like a reflection of the global economy.
In what way?
They're involved in so many industries.
They touch every part of our lives.
From the cars we drive,
to the clothes we wear,
the energy we use, the insurance we buy.
They're everywhere.
Their success is tied to the health of the global economy.
But that means they're also exposed to the same risks.
Climate change, technology disruptions, geopolitics.
They face the same headwinds as everyone else.
Navigating these challenges takes skill.
And adaptability.
Berkshire has a long history of success.
And adapting to change.
It'll be fascinating to see what they do next.
Speaking of adapting, their acquisition of Allegheny Corporation was a smart move.
That was a big
It expanded their insurance business significantly.
Allegheny is a well-established company.
With a focus on property and casualty insurance.
So it's got a good track record.
And a reputation for strong underwriting.
It's a perfect fit for Berkshire's portfolio.
It makes them an even bigger player in the insurance world.
And gives them more resources to invest.
It's a strategic win for them.
Okay, let's talk about another concern.
What's that?
Their exposure to the energy sector.
Right. The energy industry is facing a lot of uncertainty.
With the shift to clean energy.
And Berkshire has a lot invested in oil and gas.
And utilities that use fossil fuels.
Some investors are worried about climate change regulations.
And the move to renewables.
They're concerned about the impact on Berkshire's holdings.
But Berkshire isn't ignoring this.
They're investing in renewables through Berkshire Hathaway Energy.
And they're committed to reducing their carbon footprint.
They're trying to find a balance.
Taking advantage of the energy transition.
While still recognizing the role of traditional energy.
It's a complex issue.
With no easy answers.
But Berkshire is approaching it thoughtfully.
With that long-term perspective they're known for.
Let's talk about their real estate holdings.
Yeah, they've got a massive portfolio.
Commercial properties, residential developments, even farmland.
All of that generates steady income.
And helps protect them from inflation.
It's another example of their long-term thinking.
They've been buying real estate for decades.
Patiently waiting for it to appreciate.
And it's paid off.
So, here we are again.
Back to the big question.
Is Berkshire Hathaway a good investment?
We've covered a lot of ground.
Their financials, their strategy, the risks, the opportunities.
Their history, their culture, their leadership. The challenges they face?
It's not a simple answer.
It depends on your individual goals.
Your risk tolerance.
And your time horizon.
Hopefully this analysis has given you some food for thought.
And the information you need to make a good decision.
We encourage you to keep learning about Berkshire Hathaway.
They're a company worth watching.
Their story is far from over. All right, we've talked about their holdings, their strategy.
Yeah.
But what about their own stock? BRK.A and BRK.B.
Those are some famous ticker symbols.
They've done pretty well over the years.
Phenomenal long-term performance.
Consistently beating the market.
But past performance doesn't guarantee future returns, right?
Of course not. There are always factors to consider.
Like that big question mark succession.
What happens after Buffett?
Exactly. How will the stock react?
It's tough to say. Could be some volatility.
And then there's their size.
It's a double-edged sword.
They're so big, it's hard to find investments that really move the needle.
They need those multi-billion-dollar deals.
Which are getting harder to find.
And then there's the global economy.
Always a wild card.
What if we hit a recession?
Even Berkshire could feel the pain.
Their diversity helps, but no one's immune.
So yeah, Berkshire has a great track record.
But investors need to be realistic.
Understand the risks.
It's not a sure thing.
But it's a solid company.
With a history of success.
Okay, we can't forget about their shareholder meeting.
The Woodstock of capitalism.
Tens of thousands of people flock to Omaha every year.
To hear Buffett and Munger speak.
It's an incredible event.
A chance to learn from the best.
And connect with other investors.
The fact that they can attract such a crowd.
Speaks volumes about Berkshire's appeal.
It's all about their values.
Integrity, long-term thinking, building value.
So as we wrap up,
what are the big lessons here?
I think the biggest one is long-term thinking.
Berkshire has consistently won.
Because they're patient.
They make decisions for the long haul.
Even if it takes time to see the results.
That's a good lesson for any investor.
Don't chase quick profits.
Build a portfolio that can weather the storms.
And be patient.
Berkshire doesn't get distracted by short-term noise.
They stick to their plan.
And they always act with integrity.
They've built their reputation on trust.
Those are valuable lessons.
For investors and business leaders alike.
So we've covered a lot of ground today.
Financials, strategy, competition, risks, opportunities.
History, culture, leadership.
We've looked at their strengths.
And their weaknesses.
We've tried to paint a complete picture.
Of this complex and fascinating company.
We hope you found this analysis helpful.
And informative.
Remember, the best investment decisions
are the ones you make yourself.
Based on your own goals and your own research.
So keep learning, keep exploring.
And happy investing.
We'll see you next time.